Today we'll be discussing the 2020 outlook as we head into the new decade. Let's take a look. According to Transamerica, a variety of positive characteristics could come together to drive markets higher in 2020. The largest variables on the horizon are the upcoming November elections, geopolitical events, and follow-through on recently improving U.S. China trade relations. But here are factors that we think could result in potentially driving markets higher. Inflation is low, and U.S. consumer isn't overlevered. Additionally, monetary and fiscal policy remain very supportive of growth and risk assets. The U.S. market could remain bullish in 2020. U.S. stocks recently achieved record highs and are well positioned as reflected by the economic and market conditions. Transamerica predicts a realistic one-year target on the S&P 500 to be 3,600. With stock and bond valuations elevated, the risk of rising volatility is higher in 2020. According to Brinker Capital, the Fed is likely to remain on the sidelines over the next year, and a Fed rate increase may be unlikely. Bond investors should be well positioned toward the short end of the curve, as longer maturities may not sufficiently compensate them for greater interest rate risk if the yield curve continues to steepen. A realistic range on the 10-year Treasury over the next year would be 2 to 2.25%. High-yield and investment-grade bond investors are likely to experience coupon-type total returns in the year ahead, as fundamentals continue to appear solid, although credit spreads remain close to multi-year lows. Bond investors should continue to look toward higher quality segments of the investment-grade and high-yield markets. While remaining optimistic on the U.S. economy and risk assets, markets internationally are looking attractive. Opportunities and international equities are looking stronger on both developed and emerging markets, are positioned for a relative rebound versus U.S. stocks in 2020. Should both global growth and emerging markets earnings accelerate in the year ahead, this would likely be favorably received by markets. As we've witnessed in the last election cycle, it can only be expected that the upcoming presidential election will likely be even more hostile and contentious. All things considered, politically based volatility in the year ahead could prove to be an opportunity. That wraps up our 2019 market review and 2020 market outlook. Please contact us to see how your financial plan will fare in 2020.